Your business has $250,000 in accounts receivable, but who owes you that money? And how much does each customer owe? The general ledger will show you the total, but not the detail behind it. That's where subledgers come in. Hello there, I'm James, you're watching Accounting Stuff, and in this video I'll attempt to explain subledgers in less than 2 minutes. Start the clock. What is a subledger? A subledger or subsidiary ledger is a detailed record that supports a control account in the general ledger. It takes one balance and breaks it down into its individual parts. Depending on the account, those parts might be customers, suppliers, employees, or different assets. The general ledger gives you the summary and the subledger gives you the detail behind it. If that doesn't make sense, don't worry, we'll break it down piece by piece. Why do businesses use subledgers? Because on its own, the general ledger doesn't give businesses enough detail to manage day-to-day operations. Knowing an account balance is useful, but you also need to know what makes up that balance. Subledgers fill that gap in 3 ways. Detail. You can see exactly what makes up that balance, whether it's customers, suppliers, employees, or assets. Organization. Each account gets its own dedicated record, which makes it easier to navigate. And control. Different teams can manage their own areas without cluttering the general ledger. The bigger the business, the more essential subledgers become. How do subledgers work? Let's look at an example. Silph Co is a large technology company based in Saffron City. They manufacture and sell training products. Here's their general ledger, the main accounting record that stores a complete history of the company's accounts and transactions. You'll notice the accounts receivable balance of $250,000, which might ring a bell from the start of this video. From the general ledger alone, all we know is the total. Customers owe Silph Co $250,000, but we can't tell who owes that money. To find out, we need the Accounts Receivable Subledger. Inside, we see each customer's balance. Pokemart owes $120,000, the Safari Zone owes $50,000, and the Pokemon League owes $80,000. Together, they add up to $250,000, matching the balance in the general ledger. But we can go even further. Each customer balance can be broken down into its individual invoices. For example, Pokemart's $120,000 is spread across 3 invoices, and the same goes for the other customers. So the Accounts Receivable Subledger gives us the detail behind the balance in the general ledger. There's a name for accounts like these. They're called control accounts. What is a control account? A control account is a summary account in the general ledger that's supported by a subledger. Let's go back to the general ledger for Silph Co. There are 5 control accounts on this screen. Can you spot them all? First, we have Accounts Receivable, a control account that summarizes the balances of individual customers. Then there's Accounts Payable, which summarizes the balances owed to individual suppliers. Salaries Payable, which summarizes employee balances stored in the payroll subledger. Inventory, which summarizes individual inventory records. And Fixed Assets, which summarizes the detailed fixed asset register. Together, these 5 control accounts give us a summary of information stored in much greater detail in their related subledgers. But that raises a question. How do we know the balance in a control account actually agrees with its subledger? We reconcile them. How do you reconcile a subledger? When we reconcile something, we compare 2 sets of records to make sure they agree. In this case, we're checking that the total of the subledger matches the balance of its control account in the general ledger. It's easier than it sounds. Let's walk through an example. We'll reconcile Silph Co's Accounts Payable Subledger against their Accounts Payable control account. The control account shows a balance of $180,000 in the general ledger. Now let's check the Accounts Payable Subledger and see if everything's correct. The 2 should match. Unfortunately, they don't. Silph Co owes money to 2 suppliers, $100,000 to the Devon Corporation spread across 2 invoices, and $50,000 to the Cinnabar Research Lab. That gives a subledger total of $150,000, but the control account shows $180,000. The two records don't agree. So where's the missing $30,000? After some investigation, we find the culprit, manual journal entry number 10458. It's for $30,000 of laboratory testing services from Cinnabar Research Lab. The problem is that the transaction was posted directly to the general ledger, bypassing the accounts payable subledger. So it increased the control account balance but never created a supplier record in the subledger. So the two have fallen out of sync. Here's how we fix it. First, we reverse the manual journal entry by posting this one here. This removes the $30,000 from the control account. Next, we enter the invoice correctly through the accounts payable subledger. When we enter a bill this way, our accounting software automatically creates a journal entry behind the scenes, updating the control account at the same time. Cinnabar Labs balance increases from $50,000 to $80,000. So the subledger total now matches the control account at $180,000. Now the two records agree, and that's exactly what we want to see. We've reconciled to the accounts payable subledger with the accounts payable control account in the general ledger. If you'd like to learn more about the general ledger and how it all fits together, I'd recommend watching this video next. If you're studying accounting, make sure you grab a copy of my free accounting cheat sheet. I'll drop a link to it in the description. And remember, the general ledger shows you a summary, the subledger shows you the detail. See you in the next one.